Mortgage as an investment, it's something for many to consider. Let's find out more from Mike Hapke. He is with Advanced Mortgage Investment Corporation. Good morning. Thanks for your time.
Morning, Leslie.
A lot of people, this will be new, so let's start with the 101. Who should consider mortgage as an investment?
Well, I think it's important to note, first of all, that we're talking about a little bit of information in a very short period of time. So this is just basically for general information. And, it's something that, it's very important when you're looking at investment that you get personal advice with respect to, is it suitable? Is the risk tolerance suitable to you? Is it something that you're comfortable with and you fully understand? So when looking at mortgage investments, there's a few ways you can start at looking at it. You can find mutual funds that would basically be some type of mutual fund or mortgage investment within it. But that is not a direct mortgage investment. What we're talking about is really looking at mortgage on a one-to-one basis, or particularly looking at a professionally managed pool of mortgages. And that's what we tend to focus on. So for us, it's a professionally pooled a portfolio of mortgages, and investors invest within that pool in order to diversify risk.
All right, let's look at the state of the real estate market. It's pretty hot here in Ottawa, across the country for the most part as well, and mortgage rates are quite low. So it sounds to me like the risks are minimal at this point.
Well, whenever looking at any investment, there is some risk associated, with doing that. So it's important to note. But keep in mind, when you're looking at risk, it doesn't always, connotate that risk is a bad thing. You have to look at risk and determine what potential risk you're willing to take in order for the amount of reward that you want to gain. So if you're looking at an investment, yes, you could look at it and say it's risky, but I'm prepared to take that risk for a higher level rate of return. So in this case, we're talking about Ottawa real estate. And if you're talking about Ottawa real estate, we know that the supply is very low and the demand is very high. So that is the underlying asset for this particular investment. So when you're looking at overall risk, we know that the Ottawa real estate market has been very robust and that there is a lot of growth potential in it. And in fact, I would argue that as a metropolitan city for decades, we've probably been lagging behind in real estate values, and we will likely continue to see that upward pressure. So keeping in mind, when we talk about risk again, as the values of that real estate continue to increase, the actual loan amount that we have lent out on that particular mortgage tends to drop because the value is higher than the loan amount. So the underlying security is in Ottawa real estate. So at the end of the day, very secure.
And it's going up, 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 as you know. I think it's like 30% year over year. We can't expect those kind of returns. What can we expect?
So with respect to the rate of return within our portfolio, we always aim for about between 7 and 7.5. Our 6-year average runs at about 7.7. But it's also important to note that we never chase money out the door. So we're always looking for good, clean, kind of cookie cutter type mortgages that we can invest in and make sure that we have a clean exit. Our average borrower has a credit score of over 700. So that just kind of shows you the level of a borrower that we have within the portfolio. And so the rate of return is always between 7 and 7.5. That's what we aim for. But if the situation changes and we need to pull back a little bit, then that rate could go down a little bit, but we're still on target for between 7 and 7.5.
That's amazing for a lot of folks, given the calculated risk. RSP and TFSA, are they both eligible here?
Absolutely. You can look at investing in a mortgage investment corp either in non-registered funds, registered funds, tax-free saving, RIF, even RESPs. So lots of different flexible options for the viewers to look at using mortgages within their retirement savings plans.
Where do we go to find out more?
Hop on. You can check us out at advancedmic.com. So advancedmic.com.
Easy enough. Michael Hapke, thank you. Appreciate it.
Thanks, Leslie.